Howdy, everybody. Welcome to Liberty Call. Today is Tuesday, April 15th, 2025. Hope you're having a fantastical day out there in the interwebs. Was a pretty nice day here. A little chilly this morning. It's garbage day. I had to go out early and take the trash out to the street so that Mr. Garbage Man could come by. Well, today they actually loaded it into the truck. Usually they got this like crane thing goes. So, anyways, very exciting stuff. It's also tax day. If you haven't done your taxes yet, probably ought to do an extension, or you probably want to get it done today. So one of those two things. I did mine. It only took me about an hour on Sunday. So all that stressing and everything people worry about, I knocked it out quick. Unfortunately, I did all the work, and then at the end, it told me that I could just take the standard deduction. Didn't have to worry about doing all the stuff all the record keeping that I do. So, anyways, all right. Well, markets are mostly flat, but tensions, anything but. The White House is floating plans to delist hundreds of Chinese companies, while big banks like Bank of America and Citi post solid earnings. Netflix is mooning on trillion-dollar dreams, and Boeing's grounded again by China, and JP Morgan just slashed its year-end forecast for the S&P. So before we unpack all that noise, let's do one thing. I need some from you. Give me some thumbs up, a like, share, subscribe, a follow, and press that darn notification bell. All right, let's get to the markets. Dow Jones finished the day in the red, down 0.39%, 156 points, closed at 4368. S&P 500 down 0.2%, 11 points, closed at 5394. NASDAQ down 0.05, so pretty much flat, 8 points, closed at 16,823. The VIX was also down today, 2.49%. It's at 30.11. Canada up 0.84, Brazil down 0.19, and Mexico up 0.6. Headed to Europe, Germany up 1.32, the UK up 1.41, France up 0.86, Italy up, that's not Italy, that's Netherlands up 2.12, Spain up 2.14, Italy up 2.39, Switzerland up 0.86, and Portugal up 1.87. Russian exchanges mixed again today. The MOEX down 0.54, RTSI up 0.03. And the overnight markets, the Nikkei in Japan was up 0.84, Australia up 0.17, New Zealand down 1.01%. In China, the Shanghai up 0.15, Shenzhen Component down 0.27, China 50 up 0.5%, TJ Shanghai down 0.05, Hang Seng up 0.23, and the Taiwan weighted when it closed on the 14th, down 0.08. All right, good stuff. I know. It's always very exciting to go through the news and the markets, isn't it? Yes. That's why I have so many viewers. Okay. All right. Well, let's get to the market recap. S&P 500 gives up some gains as tariff uncertainty continues to weigh. The S&P 500 slipped Tuesday, losing early session gains as investor optimism faded under the weight of tariff-related uncertainty, particularly affecting healthcare and consumer sectors. Healthcare stocks led the downturn after the Trump administration announced new investigations into pharmaceutical and semiconductor imports, signaling possible future tariffs. Moderna, Zimmer Biomet, and Molina Healthcare were among the top losers. The tariff anxiety also hit consumer stocks with expectations that higher prices will dent spending. French Prime Minister Francois Bayrou, I probably said that terribly wrong, slammed the U.S. approach, saying Trump's, quote, tariff hurricane, end quote, has, quote, shattered trust around the world, end quote. Really? Okay, if you say so. I mean, nothing's really changed where I'm at. On a brighter note, major banks reported solid Q1 earnings, providing some lift to the broader market. Bank of America surged over 4% after reporting a rise in net interest income and strong trading revenue amid volatility. Citigroup followed suit with a 4% gain on better than expected earnings and equities trading strength. In corporate earnings, Johnson & Johnson topped expectations, but revised its full-year guidance lower, weighing on the stock slightly. Netflix popped over 6% after the Wall Street Journal reported the streaming giant aims for $1 trillion valuation and plans to double revenue by 2030. It's one of those BHAG goals, big, it's an acronym for something. Basically, big, enormous, hairy goal. It stands for something like that. Looking ahead, all eyes are on the Federal Reserve Chair Jerome Powell, who is set to speak Wednesday amid growing speculation about interest rate policy in the face of tariff-induced economy uncertainty. Finally, OpenAI is exploring the creation of a social media platform to rival X, formerly Twitter, signaling its intent to expand beyond AI tools into broader digital ecosystems. Okay, interesting stuff. All righty, let's get to some data. Let's get to it's an article from Zero Hedge. U.S. import prices tumble despite China tariffs. All right, the narrative of skyrocketing inflation for American consumers, heavily promoted by mainstream economists and the University of Michigan sentiment surveys, took a hit this week as new data suggests that President Trump's tariff strategy might be playing out differently than expected. Gosh. All right. Despite widespread fears that Trump's aggressive tariffs, especially on Chinese imports, would drive U.S. consumer prices sharply higher, recent developments indicate that foreign companies may be absorbing the tariff costs themselves, rather than passing them on to U.S. consumers. The first sign came from Sony, which announced price hikes for consumers in Europe and the Middle East and Africa, but chose not to raise prices in the United States. This decision supports Trump's argument that companies won't risk losing their largest customer base and will instead eat the tariffs by sacrificing profit margins or raising prices elsewhere. More importantly, U.S. import price data for March showed a surprise decline of 0.1% month over month, the first drop since September of 24, even after the U.S. imposed a 10% tariff on Chinese goods in February. Goldman Sachs noted that prices for consumer goods, excluding autos, fell 0.2%, while auto prices dropped 0.1%. This suggests companies are cutting pre-tariff prices to remain competitive in the U.S. market. Goldman now estimates that core PCE inflation for March rose just 0.08%, keeping annualized inflation at 2.67, far from the hyperinflation narrative. Headline PCE was unchanged, up only 2.32% from a year earlier. In essence, Trump's strategy appears to be working so far, at least in the short term, as importers, particularly Chinese firms, are absorbing tariff costs rather than passing them on to American consumers. While it's unclear if other major companies like Nike will follow Sony's lead, the current data shows that fears of runaway consumer inflation may be overstated. I know, shocking that the media would not be or would be less than honest with the public. I know it's shocking after all of the honesty we had through COVID, several of the last elections. One election was, shaky or sketchy, 2016, 2020, safest, most secure election ever. And then again in 2024, there were some shenanigans because, Elon runs the internet or owns it, according to, who said that? I believe that was Rosie O'Donnell she was being interviewed over after going to Ireland. She said that Trump's friend Elon owns the internet, and I guess she, in her mind, thinks that he could change the election. I think most of the chicanery has to do at the local levels where you got people stuffing ballot boxes. But I don't have the evidence of that. It's just a feeling I have because I don't trust either side. Quite honestly, I think they cheat on both sides. I just think the Democrats are better at it. So, all righty. Last article up from Zero Hedge is De-Dollarization on the table. BRICS summit approaches as trade wars simmer. This was written by Brandon Smith of altmarket.us. So let's see what he had to say. Mr. Smith's piece from altmarket.us argues that the current U.S.-China trade war under President Trump's renewed tariff campaign marks more than just a policy shift. It's part of a broader global realignment that could dismantle the U.S.-led economic order established after World War II. According to Smith, this East versus West divide, particularly between BRICS nations and the U.S., has been building for decades, not just since the Trump era. Behind the scenes, he asserts globalist institutions like the IMF and the BIS, I believe that's the Bureau of International Settlements, or the Bank of International Settlements, have long been working to replace the US dollar as the world reserve currency with a centralized digital monetary system, using crisis and as cover to push forward this agenda. Smith notes that while Trump's tariffs may signal an effort to end America's role as the financial backstop for the globe and revive domestic production, they also provide fuel for globalists to blame the US for the global financial chaos. That's a word that the media has been using a lot. I mean, if you were to pull like some of the things I listen to, they go and they pull all the different newscasts, and what they show is that they all just say the same exact thing. I guess they just read directly from the newswire that comes out from the DNC. I mean, chaos was like one of the main buzzwords last week. The trade war, he says, may be used as justification to introduce a global central bank digital currency, a CBDC platform managed by the IMF under the guise of, quote, resetting, end quote, a broken system. Smith is skeptical that BRICS nations alone can challenge the dollar, noting that their own economic instability. However, he argues that BRICS could be used as a vehicle by global institutions to usher in a new SDR-based digital currency, effectively replacing the dollar, but still controlled by entities like the BIS and IMF. The upcoming July 2025 BRICS summit in Rio is highlighted as a potential flashpoint, particularly as it coincides with the end of Trump's 90-day tariff reprieve. Smith warns that if Americans don't stay vigilant, the end of the globalist era may simply become a rebranding, one controlled by the same elites using the chaos of de-dollarization and tariffs to usher in a new global monetary regime. I would be just shocked if that's what they were trying to do. Because people in charge really don't like it when the little people like us have a say in the matter. So anyways, all right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a call. I'd be glad to help. All right. Well, hope everyone out there has a wonderful evening, and I'll talk to everyone again next time. Adios.